Hello friends, I mentioned in the course prerequisite lecture video that I expect you to have some basic understanding of trading. However, forex trading is something many of you may not have much idea or exposure to, and that's perfectly fine. The underlying concepts and attitude when trading across different asset classes remains more or less the same. However, every asset class has certain idiosyncrasies that makes it unique, and traders are expected to have a fairly good understanding about those features or idiosyncrasies to ensure that they are playing on a level field. And in forex trading, there are a number of things that you need to be aware if you want to be a successful forex trader. So there are terms like pip, base currency, counter currency, leverage, margin, whatnot. And it is very important that you have a fairly sound understanding of these terms before you embark on your forex trading journey. I will show you how you can interpret these terms using the MT5 terminal and to cement our understanding and ensure that we are able to use these terms in our algorithmic trading journey. I'll also show you how you can use MT5 API to access the same information that we explored on the MT5 terminal. So if you are someone who have experience in forex trading, you may skip the part where I'm explaining these terms. However, I would still want you to go through the lecture videos where I am discussing the API calls that we'll use to interpret these particular terms. Alright, so let us start our journey of gaining a thorough understanding about forex trading specific terminologies. So I'll see you in the next lecture video. Thank you. Hello friends. If you are new to forex trading, the first thing that you may struggle to interpret is how symbols are so different in forex trading compared to, say, equity trading or bond trading. So in pretty much every other asset class, you have symbol pertaining to a specific asset or one asset. For example, if you're trading stocks, you may want to purchase Amazon stock. So in that case, you will find the symbol AMZN. And then you know that if you hit on the buy button, you will purchase Amazon stocks, and if you click on the sell button, you will sell Amazon stocks. But in the forex trading market, you would see strange symbols. Things like this, Euro USD. So it's a combination of two assets. I have both Euro and USD. And people struggle to interpret, hey, whether I'm buying Euro or buying USD, selling Euro, selling USD, what's going on? And what does this price mean? Does this mean I need to spend 1.1 USD to buy a euro or the other way around? And I'll try my best to give you an intuitive understanding of how best to interpret this symbol. The first currency symbol that you see in a given forex trading symbol is called the base currency. And this is the currency that you want to buy or sell. And the second part of the symbol is called the counter currency. And this is the currency which we will use to buy or sell the base currency. Alright, so just know that when you are trading, it is the first currency symbol that you are buying or selling, and it's the second currency symbol which you are using to buy or sell the first currency. So in this example, the Euro USD quote is close to 1.1, 1.09725 whatever. So it means that if I want to buy 1 euro, I will have to spend 1.1 USD. Now tell me what will happen if you sell 1 Canadian dollar. How many Japanese yen you are expected to get? So again, if I sell 1 Canadian, I will get around 108 Japanese yen. Alright, so the first currency is what you are buying or selling, and the second currency is what you are going to pay with if you want to buy the base currency, or what you are going to receive if you sell the base currency. So that is very important to understand. So another thing I would want you to keep in mind is that if you're buying, say, Euro USD, then you are long Euro. So if this price goes up, you are in the money. If the market price goes down, you are out of the money. Likewise, if I sell Euro USD, then I want this market price to go down because I am short Euro. So don't think too much about how the price needs to correspond to both the base and the counter currency. Just know that you are long or short the base currency or the first part of the symbol. And if the market price goes up, It's good for you if you're long, and if it goes down, it's bad for you if you're long. Just like what happens if you're long or short an equity. If you're long Amazon, and if the price goes up, you like it because you're making money. Likewise, if you have bought Euro USD, you are actually long Euro. You're always long the base currency, the first part of the symbol. Alright, so make sure that you have absolutely no problem interpreting the symbols and how your positions change vis-a-vis the market price. And in a bit, I'll show you by placing an order on the MT5 terminal, how buying and selling impacts your balance, etc. But at this point of time, I want to ensure that you have absolutely no problem interpreting the Forex symbols. Now, the next very important thing in Forex trading is the lot size. And typically, lot size in Forex trading is equivalent to 100,000 currency units. Now, what do I mean by that? So when you're placing an order, if in the volume or in the unit, you put the value as 1, it means that you are buying or selling 100,000 units of the base currency. Again, very important, base currency. So in this example, in this screenshot that I've taken, I am buying Euro USD, and because I put volume as 1, I actually end up buying 100,000 units of the base currency or euro. Now, pop question for you. What would happen if I buy one lot of GBP USD or one volume unit of GBP USD? How many GBP would I be long on? And if your answer is 100,000 GBP, then your answer is correct. Alright, so base currency is GBP. If I put volume as 1 here, the screen will show that you are actually buying 100,000 units of GBP. So, the lot size corresponds to 100,000 units of the base currency. Likewise, if you're selling, again you are selling 100,000 units of the base currency. And don't worry about a translation into the counter currency or how it will impact your balance. We'll discuss all that in a bit. But right now, all I want you to understand is when you are making a trade, how many units of which currency you are buying or selling. Alright, so that's very important. So in this example, when I bought Euro USD, I ended up buying 100,000 euros. And how much USD do you think I had to pay? So 100,000 times 1097 whatever. Or if you want to round it, I ended up paying close to 110,000 USD. And why USD? Because USD is the counter currency. What would happen if we would buy one volume unit or one lot of CAD JPY? So again, we would buy 100,000 Canadian dollar, paying 100,000 into 108 Japanese yen. So what would that be? I think that would be 10.8 million Japanese yen. Now, another very important thing to know is that in MT5, the lowest volume that you can go is 0.01. You can't go lower than 0.01. So you don't have to be anxious looking at this big number that you can only trade these big amount like 100,000 or 1 billion or whatever. No, you can trade smaller amounts as well. And the minimum amount that you can trade is 1,000 of the base currency. So like I just said, the lowest volume can be 0.01. So multiply 0.01 with 100,000 and you will get 1,000 euro. And I'll show that when we are trying to place an order in MT5. The smallest base currency amount that you can place an order for is 1,000. And that's the reason you will never see currencies like JPY or other currencies which have a higher notional value to be the base currency. You would never see JPY CAD or JPY GBP. Because think about it. What if this currency pair was JPY CAD? In that case, we would be able to trade just 1,000 JPY, which is close to $10. So this is a minuscule amount, and the brokers don't want you to trade such minuscule amounts. So you would always see currencies like JPY, Korean won, which are of high denomination. They are always the counter currency. And alright, so let us now go to the MT5 terminal and let us try placing an order for one of these currency symbols. So let us use the MT5 terminal to cement our understanding of Forex symbols and lot sizes. So there are a number of symbols here, and the best way to improve our understanding is to place some sample orders and see how things are changing. So we were discussing about Euro USD, but I'll place an order on Euro USD in a bit. I want to place order for a currency pair where USD is the base currency. And I'll tell you the reason why in a bit. So let's go with USD CHF. So right click, new order, alright? And just see the balance amount here. It is 100,966. Now what will happen if I buy one lot? Like we have discussed, one lot is 100,000 of the base currency. In this case, base currency is USD. So if I click on the buy button, I will initiate a position wherein I will buy 100,000 USD by paying the corresponding amount of CHF, which would be close to 87,450 Swiss franc. So let me do that. And you can see that as soon as I placed the order, I started getting the P&L. The balance did not change. The balance remained the same. What changed is the equity. And I'll explain to you the concept of balance, equity, margin, etc., whatever you see here later in this section. But right now, I just wanted to show you that when I traded this currency pair, I bought USD, I bought 100,000 USD by paying the corresponding amount in CHF. And just look at this margin amount. So when we placed this order, this margin turned from 0 to 1,000. Just see what will happen when I place a trade for Euro USD. This margin would increase again, but it would not be exactly by 1,000. And I'll show that to you. So new order, Euro USD. Once again, I want to buy. So in this case, the base currency is Euro. So I'm buying 100,000 Euro by paying the corresponding amount in USD, which would be close to 108,000 or something like that. All right. So why don't I click on buy? All right. And you can see that we have placed this order, but let's see what happened to margin. So margin changed from 1,000 to 2,077. It did not change by 1,000. And that is because the accounting currency that I have for this demo account is in USD. So when I traded on a currency pair where the base currency is USD, then it's a one-on-one impact. We bought 100,000 of USD, which required the corresponding amount of Swiss franc. But this Swiss franc has to come out from your account. To take out this amount from your balance, it will again have to be converted back to USD because your accounting currency is in USD. And the margin that you see is simply a multiple of your position size. And again, I'm getting ahead of myself because I've not yet explained the concept of leverage and margin. But for the previous order that we placed, the USD CHF, where USD was the base currency, the margin was 1,000, meaning we have used $1,000 from our balance amount. And that is because we are getting leverage. So when I take $1,000 from my account, it actually gives me buying power of 1,000 into 100. Because I'm getting 100:1 leverage. So in the previous case, we had $1,000 taken from my balance. But in the second order that we placed, which was Euro USD, the base currency that we traded was in Euro. So think about what happened. We bought 100,000 Euro. And to buy this, I had to use around 107,000 USD. So 107,000 USD should be taken from my account. But because I'm getting a 100:1 leverage, it ended up taking $1,077 from my balance, and that's why you see the margin here as 2,077. Again, if you don't understand it right now, revisit this lecture video once I've explained to you the concept of leverage, and that is when you will have a much better understanding. But one thing I want you to take away from this lecture is the concept of base currency and counter currency. And whenever USD is the base currency, there's a 1:1 impact to your balance. And when it's not the case, then we will have to account for some currency conversion for the impact to see in your balance. Alright, and the concept of lot size was fairly straightforward. So let me put one more trade. Let's go with which one? Let's go with a currency now in which USD is neither the base currency nor the counter currency. Yeah, AUD/NZD would be a good bet. Again, new order. Because AUD is the base currency, if in volume I have one lot, I will be buying 100,000 AUD and I'll have to use New Zealand dollar to make this trade. So what will happen is that MetaTrader will convert the USD from our account into New Zealand dollar and then make this transaction. And all these conversions happen automatically, so you don't have to worry about that. Alright, so one corresponds to one lot size, which is 100,000 base currency units. I can make this 0.1, and in that case, we'll be trading 10,000 AUD. The lowest that we can go is 0.01, 1,000 AUD. As you can see, I cannot go 0.001. Yeah, I cannot do that. So 0.01 is the absolute minimum that you can go with volume. you can definitely go with higher lot sizes like 10 or whatever. In this case, I am buying 1 billion AUD, which I don't intend to do. Alright, so that's the concept of lot size. So we have made a couple of buy orders. In this case, let me make a sell order. Alright, and you can see that the order has been placed and now I have 3 positions. So I'll stop this lecture video now. Let me know if you have any questions pertaining to the Forex symbols or lot sizes. Thank you. Hello friends. Now that we have a fairly good understanding about the Forex trading symbology, let us now get to the fun part, which is using MT5 Python API to explore the various functions that are available to us pertaining to Forex symbols. So for that, let me take you to the documentation once again. Alright, so we have been here before. This is the MQL5 Python integration documentation. So here, symbols_get is the first API call that I want you to familiarize. Alright, and you can see that this function gets us all the financial instruments which are available in the MetaTrader 5 terminal. And mind you, depending on which broker you're using, you may get a different list of symbols. So the return for this API call, symbols_get, may vary from broker to broker. So for this lecture video, I'll be using the MT5 demo server. So if you're using the same, we should get the same list of symbols. But just giving you a heads up that depending on your broker, you may get a different list of symbols. Alright, and this is a fairly simple function call to use. All that we have to do is use the symbols_get function and it returns a list of all the symbols. So let us quickly test this particular API call. So let me copy this. And in the code that we used for authentication, let us first run this code. That's the most important thing because we want to instantiate this MT5 trading object. And once we instantiate the MT5 trading object, we authenticate using the login credentials that we have stored locally. So we are all very familiar with this part. So now all that we have to do is simply call whatever function that is available to us within the MT5 Python trading object. Alright, so if I'll simply run this function, so in Python, whenever you're running a function, you have to give parentheses, so don't forget that. So let us run this line of code and let's see what we get. Alright, so we have got a lot of data and by printing it on the console, I can't really figure out what exactly I have received. So let me store this information in a variable called symbols. So if I run this now, okay, so now it is beginning to make sense. We have got a tuple with 139 objects. And this tuple consists of elements which are of symbol info type. So symbol info is a class that is defined within MT5. So don't worry if you don't understand classes and the different OOP concepts that are part of Python. All that you have to know that each symbol info object contains a lot of information about a given symbol. So let me show you where does it start from. Yeah. So see, this is one of the elements, symbol info, and it has all this information. So to better understand one of these objects, let us print only the first element of this tuple. So we all know how to access elements from a Python tuple. So if I run this now, you can see that I've got only the first element and it has all this information. So first of all, what symbol is this? So I worked with this before, so I know where to find this particular information. So what you have to do is go to the end of this particular object and look for name. So the first object in the symbols tuple that we have pertains to the Euro USD symbol. And all this information that is encapsulated within this particular object pertains to Euro USD. So what all information is helpful here? First of all, name. You may be interested to know whether a given symbol is part of your broker or not. So you may want to run a search and see whether it returns a value or not. So this is an important field that we need to know. Then what else? If I recall, they also give the bid and the ask prices. Yeah. So you see, you get the ask price, you get the bid price. There are a number of other useful information here. I leave that to you to explore it. But pretty much all the information that you need pertaining to a symbol would be available to you through this API call. One more thing that you may like to know is that this function also allows you to use wildcards to limit your search. So for example, in this case, when we didn't pass any parameter to this function call, we got the exhaustive list of all the symbols that are available within the MT5 demo server, which is 139 symbols. What if I'm only interested in currency pairs that has euro in it? So that's very straightforward. All that you'll have to do is use the wildcard operator, which is asterisk, and then give whichever currency that you are interested in. So if I run this now, so now you see that we have only 24 objects in our tuple. So for 24 currency symbols, euro is either the base currency or the counter currency. And if you are more specific, you want to find only the currency pair where euro is the base currency, you can also do that. Just use the wildcard operator at the end. So this is telling Python that search all the strings where the currency pair starts with euro. We don't care what it ends with. Alright, so if I run this now, you can see that now we have 22 elements in our tuple. So there is a reduction of 2. That means for only 2 currency pairs, euro is not the base currency. For pretty much all other currency pairs, euro is the base currency. So that's very important. So that's another thing you can do with symbols underscore get function. You can filter down your search. Just one more thing before we proceed to other function calls. Let me show you how you can access each of these elements and get the information that you want. Although it should be fairly straightforward, all that we'll use is basic Python. So symbols has all the 139 currency pairs that are available in the MT5 demo server. Now all I want to do is print out every single one of these symbols along with the bid and ask prices. So let's do that. For symbol in symbols, print symbol dot. We can access each of these fields using the dot operator. So symbol dot name will give me euro USD. Symbol dot description will give me euro versus US dollar. So this object symbol info that they have created is very similar to Python dictionary. You have a key and the corresponding value separated by commas. So nothing very fancy here. So symbol dot name. So if I run this piece of code, you can see that we have got all the currencies or all the symbols that are available to us. Let's get a bit more fancy. Let us print out the name along with the bid and the ask prices. So how do we do that? Let me get a bit more sophisticated. So print symbol is equal to placeholder, bid price is equal to placeholder, and ask price is equal to placeholder. And then I am going to provide the values that will go to each of these placeholders. So for symbol, it is symbol dot name. We just saw that. For bid price, symbol dot, I think it was bid. Yeah, bid and ask. So symbol dot bid and symbol dot ask. Alright, so let me run this line of code. So you can see that we are getting the bid and ask prices for each of these currencies. A lot of these currencies have bid and ask price of 0, meaning the trading is not happening for these currency pair at this point of time. I'm not really sure why that's the case. You can explore. But markets are open right now, and for most of the major currency pairs, you can see that we are getting bid and ask prices. Alright, so this is how we use symbols underscore get and access the relevant information. Let's look at what other API calls we have at our disposal. Alright, so next is symbol underscore info. So symbol underscore info is very similar to symbols underscore get. It gets us all that information, but for a specific symbol. So in symbol underscore info, you have to pass symbol as the parameter, and then it gives you all this information. Alright, so in this page of the documentation, we can see all the information that is available to us when we pass this function call. And you can figure out that this information is identical to the information that we got for symbols underscore get. The only difference is that in this case, we are specific. We are getting all this information for the given symbol that we pass as the parameter to this function call. So again, what are some interesting things here? We already saw bid price, ask price, bid high, bid low, whatever. I recall seeing a very important thing here, which we discussed in the previous lecture video, and that is here. Yeah, we see volume underscore min. So for this currency pair, the minimum volume unit that you can use is 0.01. We have already discussed that. I have not seen any currency pair for which the volume min is different than 0.01. Typically, the minimum volume is 0.01. We also have a max volume, and in this case, it is 500. So you can transact 500 lots of this particular currency pair that MT5 has used as an example. Actually, what is the currency pair that they are using? Euro JPY, right? So for Euro JPY, the max volume is 500 lots. Another important information is volume underscore step. So from 0.01, you can go to 0.02 lots. You cannot go to 0.015. And when I started trading on MT5, it took me some time to figure out why I was getting errors. And my errors were because I was not using the minimum volume step. So I was using some fraction amount of volume, some 3 or 4 decimal places of volume units when I was placing orders, and they kept getting rejected. So this is an important information that you should be mindful of. Alright, let's scroll through this and look at anything else that piques your interest. But again, this symbol underscore info is very similar to symbols underscore get. The only difference is that you get the information for a given symbol. So let's quickly check this as well. MT5 dot symbol info. Let us do for Euro GBP this time and see what we get. You have again got a symbol info object, but we have got for only Euro GBP. And then lastly, I want to talk about one more function call, which is symbol underscore info underscore tick. So again, symbol info tick is a abridged version of symbol info. So in symbol info tick, you only get the tick specific information. So it says that get the last tick for the specified financial instrument. And what all information is included in the tick? The timestamp, bid, ask, and then there is information about volume as well, which, as we have discussed in the first section of this course, is not really reliable because of the nature of forex trading. So I don't really use this, and neither would I recommend you doing it. But this is a very lean API call in case you only want the price information, the bid and the ask price for the latest tick of a given symbol. So let's quickly test this as well. The markets are open right now, so we should be able to get bid and ask prices. So let me do it for USD CAD, and let's see what all information that we can get. You can see that we have got the bid, ask, timestamp, and all the other information. So using this particular API call, we can actually create a very handy function that would get us the current price for a given symbol. And we would be using this function, current price, a lot in the subsequent sections when we are performing backtesting or actual strategy implementation. But let us create this function right now so that we are aware of how current price is pulled. So under the hood of this function is the MT5 symbol info tick. So all that we'll have to do is use this function call, and rather than being specific, let us pass the symbol. And again, once we pass the symbol, we'll get this tick object. We don't want that. We want either the bid or the ask price. So again, I leave that to you how you want to get the current price. You can either use the bid price or the ask price or the average between them. So I am going to use the average. So again, you know how to access each of these specific information. So dot bid, and then likewise, I would access the ask price. Actually, let me not do it like this. Let me not have the function called twice. It's a waste of computational resources. So why don't I store tick info here, and then I'll return tick info dot bid plus tick info dot ask divided by 2. Alright, so let us test this function. So current price, USD CAD or anything else. Let us run all these lines of code. So we've got 1.33684. Let me run it a couple of times to check whether this price is getting updated or not to ensure that there is no bug, and looks like it is working as expected. The current price, that is the average of bid and ask, is getting updated. Likewise, let us also test for Euro GBP. This doesn't seem to be moving, and that makes sense because it is late in night in Europe and the market might be quite dormant. Okay, so there was a tick move from 0.85887. It did change to 0.85893. So looks like this function is doing what it is supposed to do. Alright, so these are the function calls that are specific to symbol, and you can see that using these function calls, you can get pretty much any information that you seek pertaining to a given symbol. So play with these API calls, gain familiarity with them, because we are going to use them a lot later in this course. So let me know if you have any questions. I'll see you in the next lecture video. Thanks. Hello friends. In this lecture, we will discuss about a very important forex trading terminology, which is called pip or percentage in point. So forex trading is unique in the way that the market prices of these currency pairs tend to be very small. So for example, we just saw in the last lecture how most of the currency pairs trade in the range of 0.5 to 1.5. So think about it. Euro USD, Euro GBP, USD CAD, most of the major currencies in the world, their exchange rate tends to fall in this band of 0.5 to 1.5. And therefore, even a 5% move in the exchange rate of these currency pairs would be a very small amount when you look at the absolute change in the forex rate. And that's the reason forex traders have to go to 4 decimal places to be able to make sense of the market moves in the forex market. So for most currency pairs, a move of 0.0001 or 10 to the power minus 4 is considered 1 pip. And some of the currencies, for example, when you're working with the Japanese yen or the Korean won, etc., in that case, the pip is 0.01 because as we just saw, with JPY, the exchange rate tends to be in the 80 to 120 band. So it's a reasonably bigger sticker price. So we only need to go 2 decimal places to make sense of the moves. Alright, but for the vast majority of the major currency pairs, a move of 0.0001 is considered 1 pip. And it's very important that you understand the concept of pip and start thinking in terms of pip, because most forex traders and most forex trading platforms convey a message in terms of pip. No one is saying that, hey, my position moved 1% or 1.5%. Everyone would say that the position moved by 30 pips or 50 pips. I got a 60 pip profit or a 30 pip loss. It is very important that you both understand the concept of pip and start using it, internalize it in your forex trading journey. And you will see that in this course, we are going to talk in terms of pip. I would rarely use percentage as a mode of conveying how the positions or how the exchange rates are moving. Right? So it's all going to be pip. So just to give you a better idea of how 1 pip move is translated into your actual P&L, let us continue using the Euro USD example that we saw in the last lecture video, where we were discussing the lot size and the currency symbols. So let's say we want to buy Euro USD, which means we want to buy Euro by paying in US dollars. And let's say the exchange rate is 1.1. So we bought Euros worth 90,909 by paying 100,000 USD. And again, don't be confused. You may think that, hey, I just taught you that the lot size is 100,000. So why am I not making this 100,000 and this as close to 110,000? Again, the volume can be 0.9. Alright, so this is no big deal. You can change the volume from 0.01 to whatever you can trade. And you will understand why I did that, because I wanted to make the calculation easier for you to understand. Okay, so we did this transaction. So we are now long Euro and we have 90,000 euros sitting in our account. Now what would happen if there is a 1 pip increase in the Euro USD rate? Again, we have bought Euro USD. That means we are long Euro. So if the price goes up, we will make a profit. If the Euro USD rate goes down, we will have a loss. Alright? So 1 pip increase would mean that my P&L would be positive. So the price when we bought it was at 1.1, and now by 1 pip move, the price is now 1.1001. Why? Because 1 pip move is 0.0001. If you add 1.1 with 0.0001, you will get 1.1001. And likewise, 1 pip decrease would mean that the price would change to 1.0999. And now let's do the math. So with 1 pip increase, the profit would be whatever euro you are presently holding, so 9909, and the rate is now 1.1001, so let us multiply this. So we are long euro right now, and this is the value of our holding in terms of USD. But we paid 100,000 USD for this, and then if you do the math, you will see that 1 pip increase would give you close to $9 profit. Likewise, 1 pip decrease would give you a loss of $9. And you can do the same math for different currencies, and you will see that 1 pip movement for most of the major currencies for a 1 lot size would fall in the range between $7 to $14, close to $10. And later in this course, we will write a code which will use information like exchange rate, lot size, etc. to come up with an optimum position size. But at this point of time, I want you to have a good understanding of how 1 pip move would impact your P&L. And as you may have figured out by now, this per pip move P&L would change based on your position size. So in this case, my position size was 90,000. Let's say I traded a smaller amount, let's say 10,000. In that case, my 1 pip increase or decrease would be lesser. Right? So that is very important to understand. And now let me take you to the MT5 terminal, where we will try to interpret our profit and loss in terms of pip. So let us improve our understanding of pip by looking at the orders that we placed a few lecture videos back and see how we can interpret 1 pip movement. So you can see that a couple of positions that we opened, the P&L have made a reasonably good moves. So we should be able to gain a better understanding of per pip profit and loss for at least these 2 positions. So let us take the Euro USD for example. This is the price at which we entered this trade, 1.07738. And if you recall, for most major currency pairs, 1 pip is equal to 0.0001. However, you will see that MetaTrader provides prices or codes in 5 decimal places. So we have an extra decimal. But that's fine. We need basic maths to interpret what is the per pip movement. So in this case, let us ignore the 5th decimal place. So 1.0773 was the price at which we got our fill. And what is the current price? 1.0778. So we have got a 5 pip increase. And because we were long, you can see that we have made a profit. You can see that we have got $40 profit. So per pip P&L is around $10. So we purchased 100,000 euro at 1.07738 price. Let's call it 1.0774. So the actual USD that we spent, and again, USD is our accounting currency. So all the P&L etc. is in USD. So this amount that you're seeing, this is in USD. So it's good to convert your numbers to USD for ease of understanding. So our initial position was 100,000 divided by 1.07738 USD. A 1 pip move would be 100,000 divided by 1.07748. And that will give you the difference in USD, which would be per pip P&L in USD. I think it would be around 9 USD. But one very important thing to be mindful of, and there's something which I highlighted as well, is that this per pip P&L will change based on your position size. So here all the calculations is based on 100,000 position size. But if we have a different position size, the per pip P&L would obviously change. Alright, and we also discussed that for currencies like Japanese yen, the pip value is actually 0.01. So let me actually place an order for a currency pair involving JPY. So let's go with USJPY. New order. Again, let us buy. So buy. So we got USD JPY. And here the pip is two decimal places. So here we entered the trade at 145.63 and you see that it has become 0.62 and you will see that the PNL is close to $9. So if your USD position is 100,000, then per pip PNL for USD JPY also comes to around $8 or $9, but you can double check. But it's very important for you to understand that for high nominal currencies like JPY, the pip is actually 0.01. And in the next lecture video, I'll explain to you how you can get pip value for any currency. But right now, just know that for some of these currencies, it is actually 0.01 and not 0.0001. But for the overwhelming majority of major currency pairs, the pip is 0.0001. And one more thing before I wrap up this video is that, you will not be able to find any currency pair starting with JPY. You can see that when I search for JPY, all the JPY is the counter currency and not the base currency. And I explained to you the reason for this. Let's say we didn't have USD JPY and JPY USD. So in that case, if you buy one lot of the base currency, you'd be buying 100,000 JPY, which would not even be 1,000 USD. And with leverage, 1,000 USD would be 10 USD. So MT5 is not going to let you trade with just $10 of your deposit. But just for logistical reasons, you will see that these currencies having high nominal value are never the base currencies in a currency pair. Alright, so that's all I want to cover in this lecture video. Let me know if you have any questions pertaining to pip. Thanks a lot. Hello friends. So I hope by now you appreciate the importance of pip in forex trading. And you may be wondering, is there a way by which I can algorithmically extract the pip unit for a given symbol? Because we discussed that for different currency symbols, the pip unit could be different. And the answer is, it is fairly straightforward. And we have already done that in the lecture video where we used symbol info. So let me take you back to the symbol info documentation page. Alright, so we have been here before. So these are all the information that are encompassed within the symbol info object. And the information of interest for us is the point. So what is the relationship between point and pip? So 10 point makes 1 pip. So what is this currency? This currency is Euro JPY. So for Euro JPY, 1 point is 0.001. So if you multiply this by 10, you will get the pip that corresponds to Euro JPY, which would be 0.01. Alright, so point goes one decimal further and gives you slightly more granular information. But right now we don't want point, we want pip. So all that we'll do is extract this information, multiply it with 10 and get the pip value. So let us go back to our code and write a function get pip for a given symbol. Once again, I'll need the symbol info tick. So I'll use the same function call. And in this case, all I want is the point and I'll simply multiply that by 10 and return that value. As simple as that. So let me run this function. Now let us test this. So get pip Euro USD. I would expect this to be 0.0001. Oops, what just happened? Sorry, I use info tick. I want symbol info. Sorry about that. So now if I run this function and rerun it, you've got 0.0001. How about something with JPY? So USD JPY. I would expect to have the value 0.01. Let's quickly test it. 0.01. Alright, so this was pretty quick. Let me know if you have any questions. Thanks. Hello friends. Another very important feature and idiosyncrasy of forex trading is the amount of leverage that you get to use. Pretty much any forex trading broker that you choose to go with will give you an insane amount of leverage, which is at least 100 times 1. And before we understand why such high leverages are a norm in forex trading industry, let us first ensure that all of us have the same understanding of leverage. So financial leverage essentially means borrowing to finance or purchase an asset. Many a times we purchase assets like home or car by taking loan from the bank. So in a sense, what you're doing is using financial leverage to purchase an asset. But in real world, we rarely get this kind of leverage. For example, throughout the world, if you want to purchase a home, the bank would require you to make at least 20% down payment. This down payment amount can decrease or increase in different jurisdictions, but 20% down payment is kind of a sweet spot that most financial institutions are happy with. So in essence, when you are buying a house, you get a 1:5 leverage. So let's say the price of the home is $1 million. You would have to put $200,000 from your pocket and the bank would provide the remaining $800,000. So at the end of the day, you were able to own a 1 million house using only $200,000 of your personal wealth. Therefore, 1:5 leverage. Even during the heady days prior to the subprime crisis, banks were not giving more than 20:1. So even during 2005 and 6, I think the US banks did require you to put 5% of your equity or down payment for purchasing a home. But here the starting leverage that you get in the forex trading market is 100:1. That's just unheard of in the real world. And because forex brokers provide such high level of financial leverage, you are able to trade in big amounts in the forex market using just a small deposit. So let me try to explain this through an example. So let's say you sign up with a forex trading broker and you deposited $1,000 in your account. The broker provides you a leverage of 100:1, meaning your actual buying power is $100,000. Now let's say we want to put in the trade that we saw in the last lecture video, 91,000 euro by paying 100,000 USD. So we pretty much use our entire buying power, which was $100,000 in making this trade. Now what will happen if the Euro USD exchange rate moves up by 1 cent? So by now, I'm pretty sure all of us are fairly comfortable calculating the P&L based on the FX rate moves. So in this case, a 1 cent move in the upward direction would mean that we'll actually make a gain because the current exchange rate is now 1.11. It moved from 1.1 to 1.11. And that means we made a profit of close to $900. So just a 1 cent move in Euro USD rate almost double our deposit. So we deposited $1,000 in the account. Just by a small move in the FX rate, we have doubled our deposit. But what happened if the 1 cent move is in the opposite direction? Once again, you can do the math and you'll see that in that case, we'll have a loss of $900, which means that our deposit almost got wiped out. Just think about it. A 1 cent move in the upward direction, double your deposit. A 1 cent move in the downward direction almost blanked you. And this is the power of leverage. The actual return on your cash is magnified when you are using leverage. And this is one of the biggest reasons why a lot of newbie forex traders lose their deposit and then give up on forex trading. Because they don't understand the risk of leverage, they think that I can just put $500 or $1,000 in my account and I can start trading these massive numbers. And hopefully if the market goes in my direction, I will multiply my deposit. And that's true, that can happen. But if the tide starts turning in the other direction, you can very quickly lose your shirt. So it's very important that my students have a very thorough understanding of what leverage is, how this unique feature in the forex market wherein you get such a high amount of leverage makes the forex trading scene both appealing and also quite dangerous, frankly. So I expect you to have a thorough understanding of this. And one question that you may have that why of all asset classes, forex gives such high leverage. So one reason why that's the case is because unlike say stocks, FX rates tends to be stable. Because central banks are involved and they have an incentive to keep their exchange rates within a narrow band. If the exchange rate of a given country starts to become volatile, it may have serious repercussion on that country's economy. So various central banks have the incentive to keep the FX rate stable. And as a result, we don't see such massive moves in the FX market. Even this 1 cent move that I discussed in the example, this is actually a move of 100 pips, which is considered quite significant in the Forex market. So because the actual moves in the underlying asset price is very small, high leverage actually compounds the return that you can generate. So even in a slow moving day where say an exchange rate moved by only 10 pips, by using leverage, you can actually make a sizable profit with respect to your position size. So that is all I wanted to discuss on leverage. Now that you have a good understanding of leverage, there are some other important concepts related to leverage that I'll discuss in the next lecture video. Thanks a lot. Hello friends. Following from our leverage lecture video, in this lecture video, I'll explain to you some account-related important terms that you should be aware of before embarking on your Forex trading journey. And I'll show you all this information in the MT5 terminal in a bit. You will see exactly these terms mentioned on the MT5 terminal window. And if you understand these, you will have a good idea about where you stand with respect to your account. So balance is the easiest thing to understand. It is the actual cash that you have available in your account. So for example, if you signed up with a Forex broker, they usually want you to deposit some money and then you end up depositing that money. That is what is called balance or deposit, the actual cash that you park in your account. And as you trade, this balance or deposit can grow or can diminish. So make sure you're paying close attention to your balance situation. Then what is equity? So equity only comes into picture when you have open positions. Just think about it. If you have open positions, that means you have unrealized P&L. When you open a position, the markets move up or down, and based on that, your unrealized gain also moves up or down. But you will realize that profit or loss only if you close that position. So once you close that position, whatever unrealized gain that you have gets realized and then get added or subtracted from your balance. But until you have not closed your position, they sit in the unrealized profit and loss column. So your equity is simply your balance plus your unrealized P&L. So let's say you have put on two positions. In one position, you have made a gain of $700. And on the second position, you have an unrealized loss of $400. So both these positions are still open. So net, you have made an unrealized gain of $300. And let's say your balance is $10,000. So your equity would be $10,000 plus $300, which is $10,300. So if your unrealized P&L is negative, then equity would obviously be less than the balance amount. And if it's positive, then equity would be greater than the balance amount. Now a pop quiz for you. If I tell you that I have no open positions right now, does that mean my balance and equity would be identical? And if your answer is yes, that means you have understood what is equity and how equity is related to your balance. And now let us discuss the third important concept, which is the concept of margin. So margin comes into play because we have leverage. Most brokers provide us with a leverage of 100:1. So whenever you initiate a position, some part of your deposit or your balance gets locked for that particular position. And that is called margin. And it's easiest for me to explain it through an example. So let me do that. So let's say you have a balance of $5,000 in your broker account and you decided to purchase 2 lots of Euro USD at the rate of 1.1. Again, one lot means 100,000 euro. With 2 lots, we have purchased 200,000 euro. So what is the corresponding USD amount that was used to make this transaction? 200,000 divided by 1.1, which is 180,000 USD. But you only have $5,000 in your account. So how are you able to make this transaction? Again, we got leverage. So because you've got 100:1 leverage, this purchasing amount that we need is actually only $1,800. So out of your 5,000 balance, this 1,800 gets locked out. So in MT5 terminal, you will see that whatever amount that was required to initiate a position, that gets reflected under your margin section. Right? So this is the amount that is locked in your existing position. Once you close out the position, this margin amount gets released. Alright, so this is also not that difficult to interpret. And I'll show this to you in a bit on the MT5 terminal. And now the most important thing, which is the free margin. And you will see that once we start trading and once we get into actual implementation of our strategies, this free margin would be something that we would be paying very close attention to. Because this free margin tells you the actual cash that is available to you for any future trading. And mathematically, this free margin is equal to equity minus margin. Think about it. If you have open positions, you have unrealized P&L. So the price is going up and down, and based on that, profit and loss is changing. And this profit and loss is impacting your deposit. So your deposit is also potentially going up or down, and that is reflected in the equity. So balance plus unrealized P&L is your equity. But equity is not the money that is available to you. Because you took on those positions, you also locked some of that money in opening those positions. And therefore, you will have to take into consideration margin as well. So your actual free margin or the money available to you is only equity minus margin. So that is very important to understand. And later in this section, I'll show you how you can get all this account level information using MT5's Python API. But right now, I want you to have a sound conceptual understanding of these account level key terms. So now let us go to our MT5 terminal and try to gain a better understanding of these terms by seeing them on the MT5 terminal. So this is my MT5 terminal linked to the MT5 demo account. So I'm sure all of you have access to this account by now. And if you're not traded on that account, you will see that this number here is 100,000. But don't worry about it. Whatever is the number, let us discuss what all this means. Within your trade tab of the toolbox, you will see a number called balance. And if you are logging in from your MT5 demo account, this balance should be 100,000, which is a virtual money that every MT5 demo account starts with. So what is this balance? This essentially means the deposit that you have done. So let's say you link your MT5 to a broker, and that's not a virtual account, but that's an actual real money account. And let's say you deposit $1,000 into that account. So in that case, your balance would be 1,000 USD. Alright, so this balance is nothing but the actual cash that you have deposited, that you have available in your account. Alright, so this is the balance. Now, what is this equity? So you see in this case, balance and equity are exactly the same. I have 100,767 USD, both as balance and as equity. And as we discussed moments back, your balance and equity would be same if there are no open positions. And you can see that right now I don't have any position, so I'm not surprised that my balance and equity are the same. So let me actually put in a trade and show you how this equity changes. Alright, so let me go with the USD JPY trade. So how about I sell one lot of USD JPY? So let me click on this. And you can see that now I have this position wherein I have sold one lot of USD JPY. And you can see that as soon as I put on this trade, the balance and equity started diverging. And you can double check that whatever profit or loss this trade is making, the balance and equity would differ by the same amount. So equity is your balance minus your unrealized P&L from all your open positions. Alright, so balance and equity is fairly straightforward to understand. Now this is a very important concept called margin. And to understand margin, we have to understand leverage. And we have already discussed that leverage is the actual buying power your broker or your platform gives you for every dollar that you deposit into that account. And for this demo account, the leverage that we get is 100:1, meaning I can trade $100 using $1 of my actual deposit. Alright, so in this case, because the lot size is 100,000, so let me actually quickly show you the lot size again. So if I right click on this, trading, new order, so you can see that the lot size is always 100,000. So if you want to trade one lot, it's actually you're trading 100,000 USD. You can reduce it to 0.01. So this is the smallest you can go with, which is 1,000 USD, we should be very clear with the concept of lot size, right? So we traded one lot, which is 100,000 USD, but you can see that the margin here is 1,000. And why is that? Because we got 100:1 leverage. If you multiply 100 to 1,000, you will get 100,000, which is the actual position of our trade. So again, let me rephrase it. Margin is the actual money that you have extracted from your balance to put on a given trade. All right. So in this case, from my $100,767 balance, I used only $1,000 cash to initiate this position. And this is a position equivalent to a position of 100,000 USD. All right. So that is a very important concept. And now free margin should be fairly straightforward to understand. Free margin is simply all the cash that is available to you to initiate new positions. And how will we calculate that? So free margin is simply your balance, which in this case is 107.67.25 minus 1,000 plus or minus whatever P&L that we have generated. And you can double check that is the value that your free margin would give you. Right? And margin level, as we have discussed, is simply your equity divided by the margin times 100. So you take this number divided by margin times 100. Alright, so numerically it's fairly straightforward to understand what these numbers tell you, but you should have a fairly good idea of conceptually understanding what each of these numbers is telling you. So if you are a trader, have a very close look at your equity number, because this essentially is telling you what is your present liquidation value. So you need to keep a very close eye on this particular number. So just keep that in mind. Alright, so that's all I wanted to discuss in this lecture video. Let me know if you have any questions. Thanks a lot. Hello friends. So let us now see how we can use MT5 Python API to get all the information pertaining to your account. So let me take you back to your documentation, and the relevant API call is account_info. So let us check that. Alright, fairly straightforward API call. No parameters need to be passed. As soon as you run account_info, it gives you all this information. It gives you the leverage. Mostly you will see 100, but there is a possibility that your broker is giving you a higher leverage. So do check out this information. It's very important. Then where is balance? Yes, this is the balance. This is the cash balance that you have. Equity, margin, margin free, everything that we discussed in the last lecture video. So let us quickly test this API call as well. So let me copy this. So mt5.account_info. No parameters need to be passed. So if I run this, these are all the information. So what is my balance that is showing here? 100,949. So let me take you to my terminal and let us cross-verify this number. 100,949. Right now I don't have any positions open. So my equity, balance, free margin, everything is the same. But I can assure you that even with positions opened, you will get exactly the same information that you will see on your terminal. So you can see that everything is 109.49 here as well. Margin free, equity. So let us create a function called free margin, because free margin is something that is the most important for us, because this is all the cash that is available for initiating new position, because it excludes any cash that is tied to existing positions and all unrealized profit and loss. Alright, so very straightforward to get this. mt5.account_info. What is it? Margin_free. Margin_free. So return. So if I run this and then I run free margin, I will get the information in float type. So you don't have to convert it, they return it in float data type. So let us create another function which will give us everything that we see on the console. So let us call it account details, and this would return a tuple. But before returning, let me store this information in a variable called account details. So let me copy it from here, and then let me return a dictionary. So balance is account details dot balance, equity counts detail dot equity margin, count detail dot margin, and lastly, free margin, it has to be in quote, free margin, count detail dot margin underscore free. Alright, and let us test this function, account details. And if I run these lines of code, I'll get the information that I want. Alright, so account details is again a very handy function call. We get the information that we want in a very convenient way. And you'll see that once we implement our strategy, we would be extracting this information before placing any order. Because before you place an order, you want to be very sure how your account is looking. Alright, so let me know if you have any questions and I'll be happy to help. Thanks a lot. Hello friends, it is now assignment time. By now, you have enough familiarity with MT5's basic Python API calls, and now I want you to write a function that will return the optimum position size for the required per pip PNL. So I'll tell you what I mean by that. So let me open a new script. So what I want you to do is create a function called getPositionSize. And here the parameters would be the symbol and then required per pip PNL. By default, I'll make this 10 USD. And based on your requirement, you can change this required per pip PNL to be $5, $50, whatever. And then finally, we always get lot size as 100,000, but let me also make this a parameter or default parameter. This function should return the optimum position size that is required so that your per pip PNL is equal to this amount. Let me tell you, it is not that simple. It's a bit tricky because you have to take a number of things into consideration. However, I want you to give this an honest attempt because trust me, if you are able to get this function working, that means your fundamentals are very clear and you are ready to progress to the rest of the course. Alright, so I'll not give the solution right now. Once we get to the section where we are implementing backtested strategy, at that point I will explain the solution to this function because position size is required when you are actually implementing a strategy. And there can be different position sizing strategies. But for this course, I am going with the per pip PNL position size. So that should be a good learning experience. But that will come later. But right now, I want you all to give this assignment an honest attempt. Thanks a lot.